Welcome everyone to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, tonight we're going to talk about the big reversal that happened in that last hour and go into what it actually probably means going forward. Let's get into tonight's video. Hey everyone, Bob Kendall here. What a day, huh? That last hour was a rip your face off rally, and we did see something else happen that hasn't happened for a while, is the order book just emptied out on that rally. So volatility increased, everything happened at that moment, and I'm not sure, other than maybe short covering ahead of the Microsoft and Meta stuff, buy the dip. I mean, we printed all the way down to the 10-period moving average, which was a substantial sell-off, and it just started to grind back, and then we got that huge rally at the end. That was pretty impressive, to say the least. Anytime you see a pattern like that, you see these things set up, you have to know that there is there's something behind it. Otherwise, a lot of folks, and it was the final day of trading. And I thought to myself, as that rally was setting up, that we were, didn't really talk about end of the month. Maybe a couple folks that had some orders that they were sandbagging before the end. Not sure. The news that we had coming out today, we had GDP below expectations. Everybody was screaming recession, at 9:30 this morning in New York. And then by the afternoon, they forgot it all, and the buy the dippers came out in big numbers today, I think. And I've been talking about some of these changes that happened. So today was the seventh day up in the markets in a row, and typically you got 8, maybe 9 days. I was talking last night. If we hold the support levels, which it didn't look like we were going to earlier, that we still have a probability getting up to the 40-week and the 200-day moving averages primarily on the S&P and the NASDAQ. So, the only other thing that I saw that I thought was interesting today was some of the White House talking heads. Scott Bessent was talking about the Ukraine-American deal. So we're now going to rebuild Ukraine. So much for cutting expenses. Very, very frustrating. I'm not sure what to think. I know the Trump team was out celebrating 100 days and how much they've done. I'm not sure what they're doing anymore, folks. I'm just, my head's spinning. It doesn't seem to be a lot of a direction right now. But as I said last night, markets seemed to be happy with it, and it looked like they were finally coming to the point where we're going to see some attrition, and off we go. There was a couple of pretty good signals intraday off of the indicators. Hopefully you guys caught some of that. I was able to let it go early, because that last half hour, like I said, it just, especially, I think the last 10 minutes, we saw just a credible surge as we come into the close. So let's talk a couple of things about what came out yesterday. As expected, mortgage apps were down. ADP unemployment actually showed 62,000 jobs. That doesn't sound good. Is employment numbers on Friday going to come out a little weaker? We'll see. Is this just we're going to see a reverse of the reverse, where you get the big reversal day? But we're already up, 0.5%-0.75% in the evening because of the Meta and Microsoft numbers. So, the Mag 7 still lives, or part of them anyway. I'm just looking here. GDP, I think we did get the deflator to come in flat. And then we're looking at, a 0.3 decline. And there's some funny numbers in that. I kind of went through some of the numbers I was looking at. and there's some weird math going on. So who knows? Is this part of the deep state trying to make things look worse than they are? I don't know. But for some reason, it was not evident at the end of the day. The other thing I thought, low conspiracy, is that maybe there was a leak on the Meta or both earnings on Microsoft. So maybe the two M's were kind of behind it. The other things that came out, Chicago PMI was lower than expected, and personal increase. PCI increased 0.5 month over month. It's expected 0.4. I'm just looking at some numbers here. So very mixed. I didn't see it as this big hurrah reversal day, but that's what we got. So let's talk about tonight. I'm going to do the monthly charts, not tonight, because I would like to see the first day of trading of May, which will be tomorrow. So we'll do most likely, I think the best thing to do is to finish off this week, get the employment numbers, and then look at the charts as they are set up for when we come into the first full week of May, and I'll cover that on Sunday night. That'll probably be the best way to handle that. But other than that, nothing else there. Looked at the database, and it is updated and getting more traction. So let's go over. We're going to just go through the typical fashion as we do every night. So let's go in and get into the database here. Okay, so we're at 46.08 bullish. Let me zoom in on this. You can see up at the top here, we got 46.08. The numbers came out, 414 new buys on 298. So we're looking at 715 roughly against 174. So another bullish rotation. We've had it's interesting because if we go all the way back to when we were looking at a week ago Monday when the market got hit, and then we saw a positive rotation on the database, I was sitting here like, wow, I've never seen that before. But part of it was that we were down literally, right now we're at 46%. We were, I think, around 18% bullish at that time. So that was the first big divergence. And in hindsight being 2020, I realized then, and I said it, that I thought it was encouraging that happened. And every day since then, we've had these bullish ratios. And if we look now, we now have had almost 13,000 buys in the indicator, in the database since going back the last 2 weeks. So that is a lot of buying. So we went, there's a rotation. These are total summary buys. And if you look at sells here, we had about 1,100. So there's been a lot of net buying going on here in this pattern. So this is pretty impressive. 46. We know the next number, 48.52, and if we can maintain this, we're coming into Thursday. If we can maintain this and get into Friday's action, and maybe we can see more positive rotation in the intermediate and start to keep building this, and we'll go through the patterns are setting up. I still am kind of stuck on the weekly chart doing its normalization mode, and the band for that to happen. I'll talk about that tonight, just because of the massive turnaround we've had. Another like 3% move in 4 hours. So this is unprecedented volatility. And like I said, the order book did clear up. Let me look at they completely we're back broken again than where we were back in the back all the way into 2 weeks ago, Wednesday and Thursday, Friday. That whole thing, they've cleaned it out. We'll see if it comes back. It had just stabilized and normalized probably in the last 5 to 6 days, it was started to act and look normal. Now they just blew it up again. So, this is one of the things I warned about this particular sequence, as all this volatility. And I think at some stage, obviously, we've got 7 days in a row. Is it 8 or 9? Maybe we can get a turnaround if we continue to move up to some of these resistance numbers. But these stats coming out of the database are pretty impressive, to say the least. So let's go ahead and go over to I've got the 10-year up here. Let's go start with the S&P here. So S&P, I want to zero in on this just a bit. I mean, look at this range. We had 54.55 to 56.26 and closed right at the highs of the session. And now we're getting some follow through. Right now we are up 18.37, nothing big. It was up a touch more. We were up to 56.39. So, this upward sloping 10 was right here. If you can see where my cursor is, we came right down to the 10 and got the reversal. So if nothing else, to buy the dip folks were out there. We went through STX. It was really extending at one stage. And I think the S&P was down like 2.3 or something at one stage. Last night I was talking about the narrowing market grid that was likely to set the tone for a bit of a possible downward move. Well, we got it for about 2 hours and then just right back into the range. And now we see the formation of the market grid starting another upward channel. And like I've been saying, this 5,800 is, if we do the entire move on the downside here. So if we measure this decline, I think it was 61.60 down to the 48.32 lows. If you recall, we had this range targeted off of this rejection off the 200 going back in late March. Looking at these numbers down here, in 48.32 ends up to be the intraday spike low. But if we look at the numbers here, we're above a 50% retracement at 0.618. I believe it's like 57.99 or something like that. It's right at 5,800, and that 5,800 number right now also is represented at let me just see here, 57. Yeah, actually 57.78. So we're right there at the 200. So 57.78 to 5,800 and change. I think there was even a 66%, which is a GAN number, which I have used a lot of years. That's going to be, if we exceed that GAN number, that I believe, I think I have the number somewhere. I'll see if I can find it. If I do, I'll go back to it. But I think it was 58.32, something like that, was 0.66. And so we're getting very close to those numbers from the standpoint of the full retracement. And I was flashing back, and I said this last night, but I remember in '87 we bounced back. I think it was a 0.77 or 73, and then we got the big reversal, and the market declined substantially. Like I said, we're looking for a trade deal. And what Scott Bessent was saying today was, we're spending money. We're going to rebuild Ukraine. We got to deal with them on the minerals. So does that mean that they have a pocket deal with Russia on ending the war? I don't know. But they seem to be doing everything but doing what they're telling us they're doing. Like, once again, show me the money, Jerry Maguire, because we need the deal. but they don't seem to be able to get one. They seem to be able to talk about one. So I'm still very pessimistic. In spite of price actions in markets and this volatility and whatever, I'm trying to see if I can find something that would tell me what's breaking this volatility, what's drying up the order book like this. What's going on here. Sometimes you can actually figure it out. I haven't figured it out yet, other than it's happened. This would be the second time in 2 weeks, which tells us this: if it stays like this as we come in to the end of the week, we're going to have elevated volatility levels. So before I move on, see if I can bring up this is the sheet for the day, the sheet this will get updated when I do the Substack later tonight. And it was 50, where we at? 56.34 when I did this snapshot. And it's 56.39 right now. So, but let's take a look at it. I think it's kind of interesting. Bullish with corrective structure. And I'm thinking, I programmed this sheet, so what does that actually mean? It looks to me that it says short-term bounce within larger correction. And I still believe, even though we've seen this monster move, there's been several air pockets to get us where we are today. If we go back all the way to the big day Wednesday, we traded, 58, 55.28 on that high just in that day, right? So we went 48.30, 55.28 that day. And then we stalled, we pulled back, and now we're going above those numbers and following through. We now have what this is showing here. If I just zoom in just a little bit here, you'll see that PPM1 now is at a 0.61. That's a very robust uptrend. So that was part of, I should have looked at the number from yesterday. Can I get that? I think I can. Bear with me a second. I'll bring it up on the other screen. Yeah, I'll bring this up real quick. This was yesterday's sheet, consolidation near key level, and then I'm just trying to see one factor here. See, we went through all of the downside numbers last night. This is what I was going to show you. We're at a 0.27 on PPM 1 yesterday. And what that means is that anything over 0.25 is trend mode. So when we came down to that 10-day moving average, there was a 60% plus probability that it would hold that number. So we came very close to it, and that's where the reversal started. There were some interesting patterns that were being projected off the 5 and the hourly when we came into that zone. And, so there was signs that we were going to bounce off of that number. No signs that we were going to rip all the way like that's when you get into patterns like this, that just tells you, that was just total euphoria. Like I said, in this case, the order book dried up again. There was nobody on the other side of the trade, and it was just bouncing around. I saw one time where there were 500, 600 points where it was just bouncing back and forth, just like a ball bouncing. And it was ridiculous. It certainly wasn't tradable at that moment. If you owned it early, you bought the dip, then you didn't worry about it too much. But this sheet here, 56.45's R1, I think right now that's a projected high right where we're trading right now. And then 55.93, I was looking at the trade recommendations off the sheet. Let me get off the page here. It is it's got a breakout trade. If it breaks over 45, trade it up to 75, 55.93 stop. But this is the one that kind of caught my eye. I'll probably be looking to try to put this on if I can get some confirmations off maybe the 5-minute chart. But 56.50 short, looking for a target of 55, 59.93. So probably just a move back to the even money there. So that's fairly interesting from that standpoint, I think, on what's setting up from there. Let's take one more quick look here. PPMs are showing continued strength. I had talked to you about this last night. It looks like we have continued upside bias until at least Monday. And then next week, it looks like it's going to maybe get a little bit of downside. And, it's just kind of interesting. Like I said, I when I was sitting here this afternoon, I was just looking at that, like never talked about any, month-end rebalancing or anything like that happening. So that may have been part of what we saw on the buy the dip. Somebody was watching it rallying and basically had to go in there and just push it in. I was talking to an old friend of mine about a particular stock that got hammered the other day. And I said, we used to have and this is the opposite, maybe, from what we saw today. But when you see spikes and moves like that, somebody put in a get me out of the market, get me out of the market, or it maybe was short covering part of it. But anyway, when you get these big dumps in these markets like this, whoever's running that order flow, and this is maybe why the order book blew up, they're just like, get me out, or I need to buy this, and I don't care what the price is. So they bid it up. And I've done many illustrations over the years on this channel talking about how price, when you get into this kind of mode, the price discovery kind of goes away. And that's why you get these really broad volatility moves. And if you're trading small, you can go in there and do stuff. But if you're trading any size, it gets real scary real quick. So but when you get the get me out or get me in orders, I don't care what the price is, you don't want to be in the way. We've seen a couple of these, like if we went back to the 2016 election after Trump got elected, I think we're down like 1,000 points in the futures. I remember running into my trading room trying to go, you got to buy that. There's no way. I'm watching the results. You got to buy it. And by the time I ran in, the market had run up 400 points. So I just kind of went, well, missed that. It would have been nice at 1,000. Minus 600 is still good, but a 400-point rally, forget it, literally in minutes. So these markets become, hopefully, will normalize again, but we're probably looking at another round of volatility and choppy trading coming back in. So that just means we could easily run to STX, RTX on both ends of the market grid. So, I'll try to cover this stuff tonight in the Substack. So remember, get the Substack. It's kendallreport.substack.com. And so let's go ahead. We'll go to NASDAQ. Same patterns. And NASDAQ, as usual, has a little stronger pattern than what we have normally. But we're looking at possible move to 200. This is interesting here. I'm going to back up for a minute, and go back to the S&P because I didn't notice this. I did notice it here. I want to see if there's a comparable here. But the PPM 200 is turning up. And I recently did an analysis. I'm working on some new math that's called nearest neighbor, looking at data, looking at aberrations and stuff. And one of the things that came out of it's a pretty big study that I did with the AI beast, but I ran a large element of all the PPMs through, and it was interesting. The PPM 200, the longest one here, was actually recognized as one of the more consistent signals that we get. And matter of fact, I've told this story, and by the way, if you're watching, please reach out to me. Send me an email, Alexander in in Germany. So if you see this, reach out to me. But I sat down with him in Zurich a number of years ago, 2 years ago, maybe almost three now. Yeah, 3 years almost. And he was the one that came up with the idea of these algos, and specifically on the 200. And I looked at it. We spent about 3 hours in a hotel there in Zurich, and I looked at it. It was very interesting. We started to talk, and this was the evolution of the machine learning. There was another Alexander got involved, but this was what he was saying. He goes, "I'm looking at all this, and the 200's good." So I did this really big study. I'm actually trying to generate some models using this K factor and using this nearest neighbor. And if you just for the record, and I told everybody last night, we've been having monster issues with our info at Kendall report. It is now working fine. I got a lot of emails today. But if you know anything about some of the stuff I'm talking about here, reach out to me. Like to talk to you. So anyway, but the point is we're getting this signal coming out where it looks like the 200 wants to turn out. I just talked about yesterday, especially there's some conflicts here on the short term versus the long term. And my goal is for Sunday night is to reconcile all this so I can give you a solid answer. And this is right now we're still, like I said, if you look at the extreme here for this session, we're looking at RXT at 20,332 and the 20,304 is the 200 day. So within today's action on the NASDAQ, we could hit that number. I'm going to go back to this S&P minis here. Yeah, the NASDAQ's leading a little bit. It's not as clean, but it is showing some increase here. And then and you can see RXT comes short of the 200 on the S&P. So I just wanted to see that. And I think what I'm going to flash for a second, we'll go over to the weekly NASDAQ. So I know I jumped around more. Weekly NASDAQ here. Yeah, so there's some pretty good resistance right here, 20,367. That'll put us up. But look at what's going on here with PPM1. PPM1 is actually, this number here is showing an extension all the way into June where we're going to see more improvement. If we can over here around, this is not to the beginning of June, if we can get above that first and second derivative on PPM1, then that would tell us that we have more upside coming. The downward slope of this 21, I'm going to draw in just a couple things here. Now we're looking at a weekly NASDAQ. But we have this area right here where we see the forecast of getting stronger PPMs, but this has been something that's been going on with a lot of these patterns lately. If we look, now this is weekly. If we look at all of the other ones on a weekly basis, we're seeing a flat right here. So this box here, PPM2 is staying down. So that's this right here. I'll draw that in. That's this angle here. So I was talking a little bit is that we're going to stay, now that we're above the 10, we're probably going to stay within this area here over the next couple of weeks. So we should see the 21-day moving average actually end up to be a key number. I can't see the number right now because the screen's frozen when I have this drawing tool on. I'll get it for you in a minute. But this is telling us that 21 days should be pretty good resistance. Now, and it's going to stay that way. This is suggesting into July that we're going to see that angle go down. So this goes also to what I've been talking about. One last drawing routine, especially this happens on the weekly S&P as well as the NASDAQ here. But this market grid should come in and do some kind of little pattern. We see these kind of patterns like right here all the time. Let me draw in a couple here. I'll use circles so we'll get creative. But you get these little areas here. There's another one off screen here. But when you start to get these volatility bubbles, which this is what I believe we're coming in here. So there will be some restraint on this upper end. We just keep expanding. And when you get the order book that dump out like this, and it takes just a series of orders. Like for instance, if you just put 100 lot in the S&P right now, you might run that thing 300 to 400 points. In a normal order book, it would maybe move it 25 points. So 25, 50 maybe, depending on how tactful you were with entering those orders. But for the most part, it would take that much price movement to absorb what we can see on the screen. Now somebody can show up out of the shadow and take the order down, but most of the time that order book is reflective of everybody that wants to play. Sometimes the price will come up and then you'll see a bid get hit or an offer get hit. But the bottom line is this kind of pattern I have right here right now is pretty good actually. And this is such a good setup here. Boy, I hate that. I want a screenshot of this. I guess I'll go back on the video and get it later. So let's go ahead and move on. Let's take a look at what's going on with the treasuries. Treasuries, as I was talking about last night, we continue to see some downward pressure here. We're down 414, 415. I think this probably stalls out right here. This is a weekly chart. Let's go to daily and just get a feel for that. Yeah, we got a nice channel down. We also have some fib targets here. Top fib target is 409. So that's probably going to be the bottom end, 410, and we should come back into 415 and 420, 25. I think this gets range bound, and you can see it's starting to get a little zigzag formation here. PPMs are suggesting on a short term that we're going to see a little bit of movement. In fact, it bounced a bit with printed 1423 high and 18 close for today's session. Let's go through the whole spectrum here. Let's do crude continues to be under pressure. It looks like we got a couple more days here. We actually hit I want to bring up these fib targets here. So we have a fib target here at trying to get the number here. We are looking at 60. I'm sorry, 47 is this lower number. Let me just look here. Yeah, there's 58, 50, and then 50, 47, 18. This is what I was like, why am I getting those numbers? There's 3 new dots. There's a new projection for crude oil on the downside here. And those numbers, we'll get a little closer here. Those numbers are $47.70, $41.37. I don't think we get there. This extreme case here back in And April, we printed down, we get some values here. We printed down to 55. So if we get below this range, this new fib targets are pretty pushing $47. That'll put us at about 220 at the pump if that happens. But definitely some downside. Let's go to weekly to see if there's some contra trends going on or some support levels weekly. Yeah, right now we have weekly kind of getting a V bottom here. So I suspect we're probably going to stay above that old fib target that I was talking about, and we're looking at 57.90. The red dots are saying we're going to come back towards the 10, which is right now 65, 65.50, 65.20 on the short-term rebound. But the daily chart, that's a very interesting pattern, but it's somewhat contrary to what we're going to see. But I should say that because the PPM1 is at a minus 0.18, that is it looks like it's turning up, but it just tells you it's going to lose momentum. So it's still going to have a major resistance point at that 60. You can see the red dots are for next several closes. These are weekly closes projected. So this is along this line here. Okay. So this is weekly gold continuing. I believe the go into the sideways range that I've been talking about. From this standpoint, we should see that we've gotten the same bubble here. Let me tighten this range just a little bit. Yeah, so I'll show you what the same thing is happening here that we're seeing is we should come into this range here where we're going to trade in this range here. We're going to stay above the 10-period moving average during this time. So we're looking at this 10 to be the dominant. It could start to roll over and we get some kind of major top here. For right now, I'm still going with where the algos are projecting us in the future of just going to maintain along that 10-period moving average. Now that 10-period moving average right now is like 31.16, so it's a ways underneath where we are right now. Let me just zero this out because yeah, so the 10-week moving average is actually 31.16. Is that the right number? Bear with me. $32.55 that's the current price. I don't know why these things aren't showing up here. Oh, here they are down here. 31.16. That's the valid number. So we're looking at that maybe coming down. I think gold is probably topped out here, and we'll see some consolidation from that standpoint. So we'll go to Bitcoin. Bitcoin still got this weekly, still has that underlying trend acceleration going to the upside. We're looking at right now, last trade 94,366. As I've been saying for days, I mean, the psychological, 100,000. If we get above that, then the 109 is the old number, the old high. I believe that was right here, 109,350. You could get an absolute stampede, especially if these risk-on markets are staying fairly fairly stable. I don't believe there's any fib targets out here right now. Let's go to daily. It's kind of interesting. With today's open, we're getting some downside projections. I think those of you who've been around the channel for a while, I think these are what I call an island. We have three of them, 81, 76, 72. Downside, algos are suggesting some weakness. I think we hold right around this 200 at 90, 94.2, something like that. We could print a bit lower, but I think we're probably going to go sideways along this 10-period moving average, this daily chart, and go from there. So let's do this. I got through all that pretty quickly. Yeah, somebody's saying long SPY, short gold. Yeah, that was good maybe several days ago. My concern with that trade would be the long SPY. I think we're going to hit a ceiling here pretty soon. I know Michael Anthony, he loves his Pfizer. He's always talking about it. Let's see if we can. I'm just looking here. Yeah, I agree with you, Jeffrey. Just looking at a couple things, comments here. Yeah, I think the main thing that I would say, just looking at a lot of these charts right now, is we're in this. It's funny, we're in kind of this euphoria, and you've got these stampedes, and like I said, the FOMO folks are out there. If you remember when we got the big reversal on Wednesday a couple of weeks ago, what happened there was that there was round after round of the folks that got caught short. There was a lot of short covering in that particular day, and it took them about a day and a half. The shorts kept coming and buying the dip, and it kept trading up around the highs, and then finally we faded a bit. And I think one of the things I talked about is the mass waves, and I call them swarms. Like this afternoon was kind of a stampede / swarm where everybody just came running in. And like I said, the last 10 minutes of trade, if you're watching like a level 2 tick by tick, it was crazy because there was nothing in the order book and very wide swings, like I said, 400 or 500 points. So those things are likely to go on. Let me just see if I like that. I'm just looking at some comments here, folks. Bear with me. I'm just looking through to see if Yeah, somebody, Brittany said, Bob, I respect you, but you've been dead wrong. Let's see, we bought 12,000 stocks. Help me with that one. You said a reverse rally was impossible on the 21st. Yeah, okay. The next 3 weeks we go 15, 20%. Not going to happen. Well, we've done that. I've seen you around, Brittany. I appreciate you going up there. So this is the way I look at it. If you look at, so I'm a portfolio manager. We sold out in January. So anything above that point I sold out at, I'm better than I was before. So right now I'm plus, even with today's rally, I'm plus 12 okay, from that 11 or 12, I think it was. I looked at it earlier. So I kind of, the fact, I'm not in the business. Anybody who's been around this channel for a while knows that I'm not trying to pick bottoms. There's no, if you get them, hey, I picked them. I bought the lows. I've done stuff like that. But my general idea here on this channel is more of a macro channel, trying to get get catch the patterns. Not only did I didn't miss it, I called it. I called the 4830 number 4 weeks before it happened. So you might want to go back just a touch more. And I saw it coming. And I don't like to buy the fallen knives. I want to see structure. We're now at what, 44, 45%. I forget the number at the moment in the database. But we bought 14,000 symbols almost. So so our portfolios have been deploying some capital, not a lot. And the intermediate is where it's at. And, I had, when the markets were going down, we came into, after October of 23, coming in 24, I had folks like yourself, I'm sure, well-meaning, but were telling me that the market was going down, it was over. And I was saying, we're going to have a double-digit back-to-back year. And right now, I always go with the data. And I think if I look at some stuff, I've been calling for the market to move back up to test the highs. We did that. I don't put buys and sells out on the YouTube channel. And if you look at all of the daily sheets that have been coming out, all the daily sheets, they've all been bullish. I put them up there for you guys every day. If you don't get the Substack, it's on you. So I think I've followed this market quite well. I don't see it being wrong. What did you say? So I said it's impossible. This is what I said, to make an all-time new high from here. That's what I said. I don't think I said it couldn't rally back into the pattern. In fact, I said it would. It would rally back into those moving averages, which it has. And that's what I was calling for. I still tell you, there's a very low probability of an all-time new high from this pattern. Maybe Trump pulls out something, a big, big deal, and we get a rally off of a trade deal, because you got the stampede and the swams that show up to try to buy it up. But in the end, there's no fundamentals to back it. You saw the GDP numbers. These things are just going to get worse. The fundamentals are deteriorating, regardless of price movement. Remember, prices are not the economy. The market is not the economy. And what I'm seeing going forward, I still see that pattern being fulfilled on the weekly pattern. And I've been saying for probably 5-10 days that we could trade as high as 5,800 on the S&P. So, if you take a couple comments, you can always make me wrong, but the general sense of what I'm trying to do here on the channel, and I really appreciate the opportunity to respond to this, because I see these things on the comments, and I'll try to respond, but no one sees them. So this is perfect. So thanks for bringing that up. But so all the algos have been projecting higher prices back into these moving averages. And, that's, so I think I've given some pretty good guidance for that. So I'm still calling, I'm looking at this pattern. We did do a right shoulder retracement on this. We came back to the Fibonacci first target. I remember talking about when we printed 55.28, we're going to do that. And I thought we would challenge the 21-day. We did. We got through it. I said we're probably going to challenge the 40. We did it. We got through it. Now we're layering up to the 200. So I'm not going to. I don't trade that kind of stuff. I'm more of an intraday trader if I'm trading. So I'm a scalper by trade and a portfolio manager. So we still manage 15 billion, and we got a lot of really hot people because we got them out of the way, and that's always something good to do, and that's what we do. We have this theory called advance and protect, and you always want to stair step your equity. And we did a pretty good job getting out of the way. We did a good job in 2020, and getting back in. 2020 was much different than what we're looking at now. And this is an impressive rally. I'm not saying it's not. It just keeps going through one metric after another, but it's been projected. And the algos are still projecting into next week higher prices. So, I guess we all have our opinions. Appreciate it, though. I really do. Let me look at a couple other things. I'm glad I scrolled up to see that comment. Yeah, like I said, monthly charts won't be any good, Todd, until we get the first print on the next month, and that'll be tomorrow. So maybe tomorrow night we can cover that. Yeah. Okay. Let's see. Where are we? Yeah, I got a little late start, but I think I don't see any more comments or anything that I can respond to. Let me look at one last area. Yeah, spin up. Yeah, I think sometimes, and listen, the indicators and everything that I have out there on the street, those things are going to help you navigate this, and they've been spot on. They've been showing you these higher prices going on. Now, Bob's got an opinion, and we still have a lot of our institutional folks that watch this, guiding people with lots of money, other people's money. So we have a little different perspective than the index trader that, and I've said this before, and I started editing the file that I did last Friday. So hopefully I'll get that done here by Friday, the way it's going. But, being a portfolio manager and handling other people's money, especially when you have billions of dollars. There was a time we had over 200 billion back in the day, but I'd semi-retired for a while, and we still have some core old clients that we have. But the bottom line is, it's a much different strategy, much different mentality that you have as far as what you should be doing with real money. Speculating, trading indexes is fun. I had an old buddy of mine used to always say, he goes, we're not in the investment business, we're in the entertainment business. And this was back in the 80s, and we were commodity traders, and, that was what it was all about. So, I've done most trades than most people will ever do. I've done more trades than most people will ever do. I've actually executed 1,200 trades in one day. So in high frequency trading with using a mouse. That was me. So, yeah, so all that's fun. I've done all this stuff, right? But when it comes down to this channel, my goal is to try to give some perspective that you folks can take other skills, hopefully, and map it together. And, I'm not always right, but I'm very seldom wrong. Haha. So anyway, folks, I think so I'm just looking. Yeah, I did trade the 1987 crash. In fact, I should get a picture. Right after the crash of 87, we got short on Wednesday before that Monday in a big way. And it was very accelerating. It was 30. I always said it was 40. It's at 32.8% technically into Monday's lows. Market turnaround on Tuesday, but yeah, we did real good. I bought a nice brand new shiny 930 turbo Porsche right after that. I called it my crash mobile. It looked like a Batmobile, and I had a car phone that it was mounted in the dash, you could call it. And my trading assistants used to call it when I was out of the office. They'd say, "Call Batman on the bat phone." Anyway, yeah, I traded all this stuff. I started in 1979, and we had a substantial amount of money going around even back in those days. And so, and I've been an institutional trader as well. I'm primarily bonds on that side. So I've got a lot of experience. Doesn't mean every trade I do is right. I don't go out on the internet and promote myself. Like there's some guy that comes up on all my videos now. I'm the most transparent. I show every trade on my Twitch. I mean, who cares? I mean, you show them every trade until you blow up. You know, I've run live trading rooms. Some of you have been in those rooms. So, you know, listen, I'm just doing my best here to help folks to go through. It's free. So enjoy that. I've also enjoyed everybody that supported my channel through just watching to buying indicators and using some of our products. So anyway, appreciate everyone being here. I really do. One of the things I do like to do, let's see, Floyd's got the, yeah, there's only one thing wave 4 can't do, and that it can never overlap wave 1. If it does, it's not a wave 4. Let's see here. Yeah, listen, folks, I really enjoy hanging out. I'm glad I'm back every day. So Bob actually, he said all of his policies, wave tech are paper and real. I don't know who you're talking about there. Yeah, I'm just looking through some comments here yet, folks. Bear with me. Anyway, we used to have some nice meetings on Discord. We'll see how the next several weeks go. I might be able to have some time. We used to do Friday Discords, and that was always fun. We'd hang out for an hour and a half, and we could talk and do all that stuff. Anyway, thank you everybody for watching. Just kind of babbling on here right at the moment. So we're right at basically an hour. I try to do an hour every night. So I'm still researching something I talked about last night at the end. Yeah, Brad, I appreciate it. Yeah, and I could see, Jeff, I could see 2879 on GC. I can see that happening. Yeah, I think the party's over there. Yeah, somebody says Russia's building troops on Baltic states. Yeah, Jay, I did go through the treasuries. So you can get that on the replay as soon as we stop, or I think you can actually pull it back a ways. And I'm just looking here, final comment here. Yeah, it's like just real quick on the China situation. I don't think any of us knows what's going on. There's so many reports. I mentioned last night that I found this channel, and I'm trying to verify see if I can verify some of the things they're saying, and see the validity of what they're saying. But they're saying there's all kind of manufacturing shutting down everywhere, and I kind of laughed at Scott Bessett saying that, you know, there could be 10 million jobs lost in China if they keep up the tariffs. And maybe it can be. And that's only, I told you last night, that's 1.34% would move China unemployment from 5.3 up to about 6.5 or so, 6.6, which is fairly high. And the issue they have in China is the Chinese government fears their people, because they're as long as they can maintain the environment, they can keep control. But if they lose control, it's done. I mean, you get that many people out of line, you got a problem. And you know. So us humans are very obedient. So. So, you know, I'm going to bring the screen back up because let me look at something here. So let me bring it up. Michael, this is for you. Here's Pfizer. This is daily. We're ripping off those lows that came in. This little red line dot here is a pivot number. You can see where my cursor is. That number right now is 2370. We're above that. That is a breakout. We're going through the 40. We're looking at an acceleration, probably heading somewhere in between this 200 sloping down, and this 40 is going to probably end up to be the support line that's being forecasted to come through here. These longer term forecasts are pretty accurate, actually. And so the shorter term have much more volatility, but the longer term, you know, that's right around right where we're trading right now at that 23 handle. You may backfill back into a 10, maybe set up a little pattern, but the red dots are saying you gotta go into 25.75, 25.80, and then maybe you even get up along this 200-day moving average. So that's a possibility. But that one's for you, Michael. You kept talking about it all night. All right, folks, I'm gonna call it quits. Appreciate it. We got one more day. We'll see how tomorrow plays out. This will be, we have 7 days up. Tomorrow will be 8 if we close higher. So somewhere between 8 and 9, we're likely at least to see some reaction, especially if we hit some of these prices I was talking about tonight. Have a great evening. See you all tomorrow night. Hey, Jeff, send me information on the info at Kendall Report, and we'll hook up.